Welcome back, students who are taking financial accounting, and in this series of videos we are working on the assigned homework problems from the digital study guide for Chapter 10, the Group B exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, you can either email or telephone an instructor to get help with that understanding. Okay, so 45B, let me get my pen. And this program today has been finicky. It's been crashing on me all over the place, and I've had to restart several of these videos and giving all kind of problems. But anyway, so accounting for various stockholders' equity transactions. It says Global Communications began 2014 with 3 million shares of $2 par common stock issued and outstanding. The beginning paid-in capital in excess of par was 9.7 million. Retained earnings was 8 million. So those are our beginning balances. In June 2014, they issued 120,000 shares at $12 a share. In October, when the market was at $14 a share, they distributed a 5% stock dividend. So it says, make their journal entries for the issuance of stock for cash and for the declaration and distribution of the 5% stock dividend. So we're going to make a journal entry for this 120,000 shares and for the 5% stock dividend. And then it says, prepare the company's statement of stockholders' equity. Okay, it doesn't say prepare the company's stockholders' equity. It's the statement of stockholders' equity for the year ended December 31st, and ignore net income. So go back and watch the previous video if you're not sure about what the statement of stockholders' equity is. I give a little spiel on the difference between the equity section of the balance sheet and the statement of stockholders' equity. Here I've reproduced the solution for the simple reason I don't want to spend an awful lot of time. It takes a lot of time to create this table and formatting and all this other kind of stuff. So I've just reproduced it, and I'll explain the numbers as they go in. Okay. All right. So we have to, number one, make the journal entries. Okay, so we're making a journal entry for the 120,000 shares at $12. So, so June, right? June of 2014, we're going to debit cash 120,000 shares at $12 a share is 1,440,000. Right, and of course we're creating common stock, okay, and 120,000 shares at $2 par is an additional 240,000 shares, and the difference between the two is the paid-in capital in excess of par, right, which is 1,200,000. Okay, so that is the journal entry for the issuance of the stock. Now we have a 5% stock dividend. Okay, so we know that this is in October of 2014. So we know that we're creating a stock dividend, so we have to take it out of retained earnings. So we debit our retained earnings, right? And our retained earnings is going to be, okay, so let's look here. So we had, let me erase some of this stuff here. Okay, so we started out with 3 million shares, okay? So we start out with 3 million shares, right, at the beginning of 2014. But we also have to take into consideration that we created additional stock in June of 2014 by issuing 120,000 shares. So we have to add in 120,000 shares. So we have 3,120,000 shares of stock, right? And so now we have the 3,120,000 shares, okay? And the dividend is a 5% times 5%, okay? And the market value is $14 per share, so times $14, and that gives us $2,184,000 that we're going to take out of retained earnings, right? And we are going to credit, since it's a stock dividend, we're going to create common stock, right? So we're going to credit common stock, and how much is that going to be? The value of that common stock, well, we have 3.120 or 3,120,000 shares, okay, times 5% because that's the dividend, and the par value is $2, right? So that all totals, when we take $3,120,000 at 5% at $2, that gives us $312,000, right? Additional of the value of the common stock. Then we're going to have, and of course, we have to consider our paid-in capital in excess of par, which is just the difference between those two figures, right? And the difference between those two is 1,872,000. Okay, so those are our two journal entries, right? Now, if you didn't understand that, go back and watch the theory videos, or go through some of the other exercises, because this portion here should already be old hat, especially if you've done the last few exercises. Okay, so now we're going to create the statement of stockholders' equity, and if you go back and do exercise 10-44B, because I that's a similar problem where we're creating the statement of stockholders' equity, and I give an explanation as the difference between the balance sheet stockholders' equity section and the statement of stockholders' equity. So it says prepare the statement of equity for the year ended December 31st. Right, so we have to start out with our beginning balances. Okay, so what are our beginning balances? Right. Notice the date here. Okay, the date is December 31st, 2013, right? The ending balance for the previous year becomes the beginning balance of this year, or I could have actually written January 1st, 2014, okay? That is what I would have actually put here, because we're talking about the year ended December 31st, 2014. I disagree with this date nomenclature right here, okay? Because this is for the year. Our beginning balance is the first day of the year, which is January 1st, 2014. Very similar to the statement of retained earnings. You have your beginning date and your ending date. Well, your beginning date is not the ending date of the previous year, it's the beginning date of this year, all right? It may sound like semantics, but it does play a role, okay? And it could possibly play a role. So I disagree with putting in that date there. I would have put in January 1st, 2014. But those balances would have come from, the stockholders' equity section of the balance sheet. And in this case here, we actually have to calculate them out, right? Because we don't have that previous statement. So what do we have here? We had 3 million shares at $2 par. So 3 million times 2 is how we got the $600,000. Okay. And it tells us the paid-in capital is 9.7 million. All right, so that's why we have the beginning balance there, and we had the beginning balance of the retained earnings of 8 million. All right, so our total equity on the balance sheet would have been 23,700,000. Right? Now we have to take into consideration these two journal entries. So we're issuing the stock, okay, and we've created an additional 240,000 shares of $240,000 worth of stock, and we had an additional 120,200,000 of paid-in capital, right, for the issuance of the stock. So that total, right, is what we've received in cash. But realize that this figure is not cash; it is equity, okay, but it should balance to the 1,440,000. Right? Then the next thing we have to consider is the stock dividend. Okay, same thing. We created an additional $312,000 in common stock. We had an additional $1,872,000 in paid-in capital, right? And where did that come from? It came from retained earnings. Okay, so we have to take it out of the retained earnings, and that's why it's a negative $2,184,000. Okay, so notice that there is no total for the stock dividend. And then, of course, the last thing we do is we have to total up, all of the figures. And when we do that, we can actually now create, those numbers on a statement of on a statement of stockholders' equity should match what you have on the equity section of the balance sheet. Okay, so they should, match. Remember, you're going to create your balance sheet first, then create your statement of stockholders' equity second. And again, when they should match. Those figures should match so that you're doing something right. That system of checks and balances. Okay. Right, so that's it for this exercise. If you didn't understand that, then go back and watch exercise 10-44B, and also watch the theory video on reporting, which is one of the later videos. It's like the next to last one, I believe, as far as theory was concerned. And if you still have any questions, you can feel free to telephone an instructor and we'll help explain it to you. Okay? So I'll see you in the next video for the last of the exercises, which will be on the focus on decision making.